Going on, everybody? Good morning. Good morning. It's Wednesday, December the 20th, 8:30 a.m. New York time. It's Venator Trading back at it, sitting in the tree stand. Hope you guys are having a good Wednesday wherever you're at. Good morning, good afternoon, good evening, wherever you find yourself in the world. Hope things are going well for you. Hope your trading's going well as we finish out this calendar year, man. Coming to the end, 2023. It's been a crazy year for me on the trading side of stuff. Finish out the stream. This is the last week of the stream for me. We'll do our last giveaway on Friday, and then I'm going to take 2 weeks off. So we'll be off for Christmas and New Year's. Next week, all of Christmas, and then the week after that will be New Year's, and then we'll be back on the charts. What is that date? We'll be back. What is that date we'll be back? We'll be back on the January 8th. Monday, January 8th will be our first stream back. So looking forward to a break, actually. Looking forward to getting away from the charts and just chilling, refining some stuff, going over strategies, reworking 2024's outlook and trading goals and plans and all that kind of stuff. So currently working on a futures challenge here with Top Step, and it's in a little bit of drawdown, not much, just a little bit of drawdown. So I do have a sell limit here set on euro dollar off of this order block and OTE entry from the overnight move down. So London has been very weak, so going to stay with the London trend here. And it sold off pretty aggressively overnight. We have a 1 hour order block right here. Wick to body entry is about 50% of that. It's also back above into the premium. If you're looking to sell, you want to sell when it's above 50% of the last leg down. And the optimal trade entry area there at the 0.62 fib. So see how that worked out. Stop is above the body of the order block, risking 0.33% there. So we'll let that play out. And pound is similarly, pound has a lot more of a fair value gap up here to trace. It may want to dig into this fair value gap. It's dug into it once, twice. It did leave behind this order block right here into the wick to the body of it now. So we'll see how it goes. There is some news, I believe, at 10. Let me pull that up real quick. Let me get my calendar up here. Yeah, consumer confidence at 10. So about an hour and a half, you'll get some more some news, and you'll probably see this push lower here. My hope is that euro taps in, and it's weaker of the two. So we'll see how this plays out. I'd love to see it get back up there into that order block. It could just touch that order block and come off. A lot of times on these order blocks, what I have seen in my just in my personal experience of trading is the wick on an order block like this, where you have a wick to the body. That's usually if it's going to respond on an order block, it should respond. It usually typically responds aggressively, or at least I've seen, from the wick to the body. And if you just target 50% of that wick, whatever your entry, you could go back and back test on your own how you want to trade those order blocks. But typically you get the best entries somewhere between the wick and the body. Obviously your best entry and tightest stop would be up at the body, but it doesn't really leave a lot of room. You could also just put your stop at the swing high above the order block, but this is just from my personal back testing experience here. So wick to body entries typically get the quickest rejections from them. Yeah. So that's just why I'm using that. And I'm just targeting this old swing low down here that it failed to run the liquidity on at this level. We did violate this 1 hour fair value gap here. So this fair value gap that was left behind, we closed a body close below it. We've come back up into it now. And so maybe a better entry might be the top of that inverted fair value gap right there that aligns with the bottom of this order block. So just going to let this go and play out and see how it goes. That's about the only thing that I'm really interested in right now. Gold, not really interested. It's taken out previous day high and just kind of fallen off. We have rebalanced the large fair value gap when we had that big push up yesterday. And oil, it just keeps pushing higher. Just keeps pushing higher. So was in a quick little snipe here on oil. Didn't really do anything. Basically, it was a break-even trade. Oh. In January, we'll do a Top Step Combine. Hopefully, we're still in it, or reset it and just go again. And then we'll restart a bespoke challenge in January as well. I'm not currently working on a Forex challenge at the moment, but we'll kick another one of those off in January as well. So Cisco and John firing shots at each other. First into like. Dunamis is here. Goa Baon, good afternoon from Africa, man. Welcome in, buddy. Glad you're here. Pound got killed this morning off CPI data. Yeah, and I'm expecting it to go lower. It probably will pull back here just to recover some of that big move. And then, man, I got stuff in my eyes. Ugh. So that's just kind of what I'm looking for here. Let's see. I thought today we might be able to go a little bit longer, but I'm probably only going to be able to go for about 45 minutes again today. 45 minutes to an hour, we'll see. And then tomorrow and Friday for sure, definitely we should be able to stay on a little bit longer than at least through the opening bell, the 9:30 opening bell. ES running into in and through the still has all-time highs up here still to go. Hasn't quite gotten up there yet, but NAS has run through its all-time highs up here. We have pierced above them, and then we're trading back right at them right now. So NAS has been ripping higher just for a couple of weeks. We had this big rip, a little bit of a pause, and then another big rip here. So it's kind of like, where does this thing go? This is kind of the end of the year Santa rally. Does it sustain itself through the final week and a half here of trading? Does it just keep going higher? Everybody's just kind of buying into the interest cut belief, and so everybody's just buying, and I don't know, it just kind of feels like it's overpriced. But maybe it's not. I don't know. Everyone that you talk to, all the reports that come out say that the economy is in fantastic shape, and everything is just really, really good. My experience in the real world is a little bit different than that. So I don't know. Maybe I'm the outlier there, but you know, we'll see. 2024 election year, so it's going to be a crazy year anyway, just because of all the election stuff and everything that's going to come out from that. Crazy how Colorado, the court said that Trump can't be on their ballot at all. They just said, no, you can't. We're not even. You're not allowed to be on our ballot. We're not going to put you on it, which is nuts. I was always told 45 minutes is more than enough. You're right, Cisco. Uh, in most of the world, it is enough. It's more than enough. 45 minutes. For Venator, it's probably even too much. Way over too much. This rally is crazy and unhealthy. However, it can continue with it for long. Oh yeah, the market can go crazy and do stupid stuff way longer than we can stay liquid for sure. So I'm definitely not. Don't hear me say I'm calling the top here on NAS or ES. I'm not saying that at all. It can definitely keep just ripping higher. It just is. It's just kind of crazy how all of the fundamentals in real life don't match what you see happening in the markets. Like it's like the markets are just ignoring all of the reality of the situation around, and acting like it's the Roaring '20s and everything is actually amazing. So I don't know. Maybe this is just a turtle soup stop run of reality, where you've got the markets are just ripping all of the liquidity that above all of the all-time highs so that it can just dump in the new year. I don't know. Who knows, man? Who knows what's going to happen? It just be prepared for anything in the new year, because I mean, honestly, just be prepared for anything in the new year. They're going to pull out all the stops. They're going to pull out all the stops because this is, every election matters. Every election year matters, obviously. But it seems the more recent elections, they are more desperate to either get power back or to keep power, depending on who's in both parties. And so it's like they pretty much are just willing to do and say whatever it takes. And, the good of the country be damned. It's not about the good of the country anymore. It's about who can stay in power. And it's kind of sick and disgusting on both sides. I'm not a huge fan of politics in general. But the world in which we live is run by politicians, sadly, not by the people. And so we have to just, unfortunately, just kind of put up with a lot of this crap. New year, new market. That's right. Time to stick up on Leo bin, boys. Yeah, you're going to need the Leo bins when all of our power grid gets hacked and everything goes down. You're going to need the Leo bin candles to provide the light, warmth, and good scents. Autumn Night, Leo Bin Candle Company. There you go. The teakwood and oak is still my favorite. We're tapping up into this hourly order block here. Right now, just have touched the bottom of that hourly order block just now. So we'll see. We'll see how far this wants to. Hopefully, we get a reaction off of the wick to the body here of this hourly order block. See if we can pull back into the optimal trade entry level from the New York move. Balsam and fig is good, is it? I need to try that one. I need to see if I can find the balsam and fig. It does sound pretty pleasant. It does sound pretty pleasant. Oh, fir. Fig is a fruit. Balsam and fig. Balsam and fir. Well, yeah. I mean, anything with that kind of pine, that woody scent is going to be fantastic, I believe. It's a good combination. Looks like we got triggered in here on that hourly order block. Wick to the body here. So we'll see if we can get any kind of reaction here off of that now. Could be setting up, if it blows through here and displaces higher, it could be a nice little breaker setup here to buy and run out the highs. These highs over here. Right now, tapping into the optimal trade entry level, right into the order block. Pound stalling out on its order block right here. Again, you can see wick to the body right in this area. Not pushing as hard and as aggressive as Euro is. Could be an interesting sell up in this level off within Q. If you want to think there's weakness, got a lot of relative equal lows down here. Ran this liquidity, barely, didn't really run it, just didn't trade through it, traded to it, tapped it, and did not get a quick aggressive displacement higher here. And ES did not run those lows, so came to it, did not trade through it. Potentially got a nice little pocket of sell side liquidity under here on ES. NQ has tapped into it just barely. May not be done. Equal lows. Came right down to it. You got this fair value gap here, 15-minute time frame, and you've got this 15-minute order block up here on ES. Do you still trade Forex with the breaker block model? I do, yes. I'm just not working on a Forex challenge right now. Breaker block model is still a great model. It just takes a long time for it to set up. Man, you have to be extremely patient and diligent with it. But it is a very, very good strategy to use. Gold grabbing some sell side liquidity. What's it doing on the higher time frames here? Kind of in a choppy zone right there. Grab sell side, pop back up. Tapped into this old high here. Failed to make new highs. We failed to make new lows. Is Monday the low of the week on gold? Look at dollar since Thursday last week. Inside day on Friday, inside day Monday. We're still trading inside Thursday's range here. So we did take out Monday, but Tuesday is still inside Friday. Currently, we're still inside yesterday's range. So very, very tight consolidation, kind of doing this little wedge thing here. What is that? A flag? A flagpole? What is this candle formation? The old Japanese candlestick flag formations. It's a inverted flagpole there. I don't know if that's bearish or bullish. I don't know what those patterns are. I used to, when I first started, I got into all the patterns, and that was so many years ago. I don't even remember what they are. The dojis and the hammers and the wedges, falling wedges, rising wedges. It's a bear flag. Okay, there you go. So it's bearish, I guess. I guess is what it is. It's bearish. Looks like this order block is not wanting to get any kind of aggressive reaction. We haven't gotten up to the body yet of that 1 hour order block. It's right up here. It's kind of a do or die area for me on this order block. Typically, if it closes up above inside the body, we can go ahead and cut our losses there, as long as it doesn't close. I want to see this wick to body be respected. Is basically it. My entry is right there at the 50% of the wick, and also lining up with the OTE entry of the overnight London push down. So got another 8 minutes here. It's obviously a big hourly bull candle there. Higher time frame is bullish. Yeah, no, we've been in an uptrend. We've definitely been in an uptrend for sure, but we failed to take out the high during the London session. We failed to take out yesterday's high here. And typically New York likes to follow the London move there. So we'll see. I've been on a 3-trade lose. This, if I lose this, will be a 3-trade losing streak right here. The overnight, if we go back, I don't know if you guys remember the 3 a.m. to 4 a.m. 5-minute fair value gap would have made an easy 1 to 2 on on euro dollar last night. Let's see, where was that? It was right here. So if you go down to the 5-minute candle, so we're starting at the 3 a.m. candle. You wait for the first 5-minute fair value gap to form. We have no fair value gaps. We finally get a fair value gap right here, and you put in you set your limit order at the touch of that fair value gap. Stop above the top of the candles that created it, the 3 candles that created it, and you go for a 1 to 2, and that would have been barely any drawdown and a pretty easy winner there on that London entry there. I'm ready for some winning streaks. So the last year I did not I stopped trading at this point last year. And I'm really only trading right now because of the stream and the Top Step Challenge combine that I'm in right now, so and knowing, I think the dangerous thing about the Top Step combine is knowing that you can easily reset it for pretty cheap compared to just buying a new Forex challenge with discount codes and sells, and you can reset your combine pretty quickly and cheaply. And so the danger is that you just very aggressively go in and try to pass it quickly, knowing, oh well, I can just reset this thing for super cheap, and you just keep taking your shots. And that's I think they're part of their monetary strategy is they're like, hey, we'll make this cheap. We're not gonna charge them a lot up front, but because it's cheap, they're gonna spend the same amount of money with us as they would with a forex firm. They're just gonna do it in smaller chunks repeatedly. So that's kind of the danger there with the Top Step Combine. And I've already reset this account once. Some of it was I'm still getting used to trading with the futures and getting my lot sizes correct, and trying to figure out if I want to trade the micros or the minis on the futures contracts. So that's part of why I had trouble early on. Apex sucked just because of the trailing drawdown. You would be in a you could I violated. I had two Apex accounts because they were 90% off. I bought two of them, and I lost one of those accounts, and I never lost a trade. I only went to break even, and I wasn't taking profits. But because of the trailing drawdown of your live trades, I would go to break even, get stopped out at break even, but my drawdown would come up behind me because my profit went 1 to 1 or whatever it was. And then I never lost a trade and still violated the drawdown on Apex. So, so stupid. But I have enjoyed Top Step. Top Step does trailing drawdown on the end of the day balance. Coming into the end of the hourly candle here, again, we did come up into that order block. We got up into the body, but so far it's respecting the body of this 1 hour close. We still have another minute and a half, so it could close above. If it does, I'll just cut my loss here. If the body of this candle closes into the body of this order block, I'll cut the loss. But if it's respecting it here, then I'll just let it roll. And it's only a 30% risk of the overall account. Yesterday on NQ, I got out. I cut my loss after an inverted fair value gap, body close above a fair value gap, and then it just ripped lower. You just got to follow your rules. You got to follow your trading plan. And if the candles print the way that violate a rule, then you got to do what your rules say. If that means cut your losses, cut your losses. If that means hold it, whatever it is. And, sometimes it's going to be just fine, and other times it's going to screw you. You guys we have to continue to think in the long-term perspective here of probabilities and what your trading edge gives you over the course of a vast number of trades. And when I say vast, I mean at least 100. Probabilities don't typically play out. I mean, I'm speaking in broad general strokes. Probabilities don't generally play out over a small sample size. They can be vastly skewed. So you don't want to build a trading strategy and plan around a strategy that only has a 20 trade sample size. I mean, you basically want to, so we did get closed inside of the wick here. So I'm going to go ahead and just leave this. And if it takes out the full position size, that's fine. Into the 9 o'clock hour here. Probabilities are more accurate the higher the sample size. That's exactly right, Cisco. That's basically what I'm trying to say is you want to build a trading plan and strategy around the largest sample size of trades that you can, because that's where you get the most accurate data of your edge in the way that your trading system works. Otherwise, the smaller the sample size, the more skewed it is and the more misled you can be on. And then you're going to get frustrated once you let's say you back test, right? Let's say you go and you back test and you build out a strategy and you take 25 trades. And in those 25 trades, you have a 75% win rate, a 1-to-3 risk reward ratio. and you're like, okay, this thing is awesome. I'm going to go in and just get freaking rich. And then you go into live markets, and what happens in the live markets, and you trade it exactly the same way you did in your back test, and your live results are just vastly different. And or maybe you have some early success, your plan goes well, but then 3 months later you get up into the sample trade size of, now you're in the 45, 50 sample trade size, and your strategy isn't doing as well. And you begin to question your strategy, and you begin to question everything about what's going on, and you're like, what's going on? The strategy should be working. You just didn't have a large enough sample size. Backtest an entire year so that you go through all the seasons, all the cycles of the market. Get a minimum of 100 trades of backtest data before you really take anything into the live market. You're just going to have, it just helps you understand when you get into the losing streaks, when you get into the drawdowns, when you get into those situations where, things aren't going well, or you're in losing streaks. It just helps you so much better to grasp and stick to the plan, and know that, okay, I know seasonally and the cycles of the market, this strategy is going to perform in drawdown to this level. And if you're at that level, then you're like, okay, well, then it shouldn't really go much lower. If it does, it's fine. But I also know that over the long term, this thing's going to pull itself out and put us back in profit. I just need to consistently stay here, not let my emotions get all tweaked out, not let my discipline just go to crap, and just blow account after blowing account after blowing account. Risk, good morning, man. Say we look at the probability of picking a random person in the country being 80 years old. Don't know what it is, but let's say 5%. But if my sample is a care home, well, I probably just went uploads. Yeah, man. That's exactly right. Yeah. It's a great example. If you just happen to back test and cherry pick a prime when a system is just working at A+ level, then cool. Right? It's like, that makes sense. Of course it's gonna look really well, but when it's just spread out across an accurate and true market, you're not gonna get the same results. Gold pushing back up into this hourly fair value gap. I don't know if you want to consider, gold has been more bullish than bearish. Don't know if you want to consider this as a breaker here, running this liquidity and then displacing lower, but there's a fair value gap inside these down close candles. We ran up into these old highs, and then we've displaced lower. This is the hourly time frame. But you do have this area here with the fair value gap inside. I would not take gold, just is super kind of choppy right now. So, and it looks like our euro futures trade here is going to get wiped out. Hourly order block looks like it's probably going to be violated. Pound not showing the same desire to get up in it. This order block on pound is holding down. You can see wick to body being respected and holding it down, and euro just ripping. Dollar showing quite a bit of weakness here into the early morning, coming into the trend, overnight trend line here. Maybe we'll get a bounce off of it. Just started watching ICT's videos. Yeah, there's a video on it. You can check out the YouTube video. It's where I lay out the strategy specifically to the 10K to $2 million challenge I was using on the Forex challenges. The only not a live stream video on the channel. That is correct. I don't know if that's a compliment or a shot. I'm not really sure. A criticism. But very funny. Either way. A breaker is, so let's say I can go through and kind of describe it for you. Let me see if there's one here easily identifiable on the 15-minute time frame. Maybe we can find something. I mean, this is not the most perfect example, but this could demonstrate what we're talking about. So it doesn't matter really what time frame you're on, but let's just say you've got liquidity above old highs, you've got liquidity above old lows. If you're bearish, then what you're wanting to see is a raid of liquidity. You want to see a move up of liquidity, a run up, and then you want to see, once that liquidity is taken, you want to see an aggressive displacement away from that liquidity being tapped. So once it's tapped, you want to see an aggressive move down. So right here, you have this liquidity above this old high. It runs it, and then as soon as it does, it starts displacing lower. So you then look back and go, okay, where did this run of liquidity begin? Where's the leg that this started on? And you could say, okay, well, it's this down close candle right here. Or it's usually on a bearish breaker, which is what this is. This would be a bearish breaker setup. The last down close candle that began that run up. So we pushed down and then we immediately started running up. Where did that begin? Well, for this example's purposes, I'm just going to say it was this candle right here. Again, this isn't the most clean example, but so we ran liquidity, we come up, and then we displace through it. Once we get this candle closure below this breaker, the model that I use looks for a fair value gap inside this breaker. So once this is violated and traded through, we wait for price to come back up into the breaker, and there's a fair value gap in there, and then you put your entry at either 50% of the breaker or 50% of the fair value gap. Your stop is above either the candle that created the fair value gap or above the breaker. You could just do it different ways. And then I target specifically on the breaker setup 1 to 2, moving to break even at 1.5. So again, a run of liquidity, displacement away. Once it trades through where this run started, once it trades through it, it should respect it. If it was going to stay bullish, it should respect that. Once it grabs that liquidity and comes back to it, it should respect this basically order block. So a breaker is a failed order block in a lot of respects. So it trades through it, leaves behind a fair value gap. You target that entry 1 to 2, and that's a very quick and dirty explanation of the order block. Excuse me. Well, I was expecting at this hourly open for this just to bull rush that stop. So far it hasn't. We're into the first 15 minutes of the 9 o'clock candle and stop still in place. It's the last candle that if it was for instance on this move right here, you could say if this was the liquidity you were targeting. Let's just roll this back right here, right? So let's just say you were targeting these lows on a 1 hour time frame. So you drop down into the 15-minute-ish, maybe even 5. You've got relative equal lows here, right? So these last up close candles, we come down, we run liquidity. I don't know what's going to happen here. All right, so we're getting this run of liquidity, right? Where did this run of liquidity begin? Now we're waiting for displacement higher after we get a run of liquidity. We haven't really seen displacement higher, a quick reaction away. Got stopped out there finally on that euro dollar trade. All right, so let's jump up 10-minute time frame. What do we see? Run of liquidity. Nothing really. Not a really good breaker setup here. Typically what I would want to see on a bullish setup would be the opposite. So it'd be the last up close candle or series of up close candles. So for instance here, if this was the run on liquidity you were waiting for, this series of up close candles, or you could take the last one, would be a breaker. We run liquidity. We just didn't, after you run this liquidity, you would want to see this move here trade through this area to be a bullish breaker. You would want to see it grab liquidity, and then you want to see an aggressive move up, but it stalled and it's just kind of trickling up. You're not getting that aggressive displacement up. That doesn't mean it won't work once it trades through it. So now you've traded through it. I don't know if it will. It should act as resistance if it comes back down into that. We'll see. Yeah. What time is this, by the way? This is all New York session here. This isn't a great, there's no really good clean breaker in anywhere in here, so this doesn't even help me describe that. I haven't really, that's what I'm saying. It is a really good model to trade. It's very patient and it doesn't show up all the time. It might show up twice a week, on one pair, maybe. There were times that I was trading it this summer that we didn't get a setup for like 2.5 weeks. So when they're super clean and they're obvious, they work really well and they're great. But when they're not obvious, like this could be a nice little breaker setup, actually. Here, you're getting this run on liquidity. You're getting a quick displacement away. You've run liquidity. Once you've tapped into all of this sell side liquidity, this right here should turn into a breaker block on the 15-minute time frame, right? Or you could either use just the top candle, you could use all three candles. I think on ICT he just uses the very last candle, the last up close or down close candle. So last up close candle, run liquidity, displaces through. You could say, depending on what time frame you go through, these candles go away, and this could be your last up close hourly candle, little fair value gap, tap into it, run higher. So this could be a nice little breaker setup there. Anyway, the video on the YouTube channel will kind of goes in depth into all of that. It actually did really well on the 10K to $2 million challenge. We passed phase 1, passed phase 2, got funded, got a payout, passed another phase 1, got another payout, and then we stalled out through the summer after that. It kind of fell apart. And we got away from it in the fall. I was just trying to do different things on the stream. So I don't know. I don't even know what I'm going to do. I don't know if I'm going to keep the challenge. I don't know if I'm going to keep this challenge going in 2024. Maybe we will. Maybe we'll give it one more shot. Or we'll just go back to trading the challenges in general and trying to get funded and get to payouts. I just want to see John Jones love ICT. I don't think you're going to convert him to that. I'm sorry, sir. I don't see that happening. I don't. So for gold, again, this could be a nice breaker setup. Two down closed candles. We push up. After this push down, we run quickly up into buy side. Once we tap buy side, we displace away. We leave behind a fair value gap. So basically what you want to see is you want to see liquidity get tapped and you want to see an aggressive move away. And then you want to target a fair value gap inside of the breaker. That's typically how I would want to enter that. And the thing with the breaker that makes it really good is your daily bias. If your daily bias or the trend is bullish, you want to look for bullish breakers, meaning you want to see raids of sell side liquidity and then displacement in your direction of the trend. Wait for that pullback and then continue the trend. If you're bearish, you want to see runs of buy side liquidity. Then you want to see that quick displacement after buy side liquidity is tapped into. So the power and the beauty of the breaker is if the breaker is in line with your daily bias, the probabilities go up extremely high that it's just a very strong, powerful strategy to work with. It's very mechanical. The only real discretion is identifying the runs of liquidity and the displacement away. So it's not truly mechanical. It's mostly mechanical, but there is discretion in, well, did it run liquidity? Did it just get above this? Is this a run of liquidity right here? Does that count as liquidity? Does this count as liquidity? So you kind of have to go back and back test your own version of what this looks like, basically, for the breaker setup. I think what I want to do in 2024 is do like have three different challenges going, and each of them trade only one strategy. Like one of them only trades optimal trade entry. One of them only trades breaker blocks. One of them only trades inverted fair value gaps, right? So just try and then see which of those entry models and strategies produce the best results. Well, put your glasses on. So when I read your comment, if it's the very bottom comment, the way that my Streamlabs is set up on the comment thread, there's these emojis and there's these other things on the screen, and so it blocks off the last there's this little line, and I can't see some of the words, and so I just assume what some words are. So otherwise, I have to pull my phone over and kind of come up and go, oh, I see what you're talking about, and that's just a pain in the butt. So most of the time, I'm accurate on my assumptions. John talks big smack about ICT for sure, and I don't think he's going to say. He's never going to give love to ICT. The only type of love he would give to ICT if his ICT came out and said, I'm a fraud. Then he'd be like, ICT, I love ICT. He's finally said something I agree with. Not a bad little reaction off that fair value gap breaker entry right there on gold. I'm not going to trade anymore after that loss on Euro today. I'll be done. My account is where is it at? 2% in drawdown now, so I only have 1% left on the combine account. I'll just trade through that for the rest of the week. We may YOLO it on Thursday or Friday, see if we can get it back to break even before I stop trading for the year. So probably go in and reset for a fresh account going into January anyway. Yeah, the multiple strategy idea is interesting to me only in that, if one is working really well, it may pick up the other two, or if two work really well and one's not working well, maybe they balance each other out. But the problem is, I guess the difficulty would be to be trading them all simultaneously. It's pretty time intensive, and being able to switch between the accounts. I don't know. I just feel like it could be. I don't know. Maybe not, because if there's no breaker set up, you just would leave that account alone. And if there's optimal trade entries, you just set your limit orders. The inverted fair value gap maybe is the only one that you would want to be watching, consistently. The other ones maybe are just higher time frames, and you don't have to sit there and babysit them all the time. This is a really nice breaker setup for risk that I was showing you earlier. Run of liquidity, displacement away, fair value gap, 50% of the breaker entry, stop above the candle that created the fair value gap, or just above the breaker, either one, target 1 to 2. This would be a break-even trade position at this point right there. That's about 1.5, which is where I go to break even on the breaker block strategy. All right, guys, I'm going to go ahead and call a stream there today. We'll be back tomorrow. Only 2 more days left to stream for the year, and then we'll be calling it a year. So thanks for being in here with us. We'll be back tomorrow at 8:30 New York time. So y'all stay safe, happy hunting, and we'll catch you guys in the morning. Adios.